Welcome back to the Deep Dive. Today we're diving into something pretty interesting, something that I know has been on a lot of people's minds out there. How is AI, artificial intelligence, actually being used in investing? And is it the same, is it the same game for the Wall Street pros as it is for, everyday investors like you and me?
Yeah, that's a huge question, especially now. AI is everywhere now. You can't get away from it. It's everywhere. And a lot of people are hoping that it can be this sort of secret weapon for investing and making money.
Right. Yeah. I've seen all these ads and it seems like everyone's got an AI for investing now, But are they all they're cracked up to be?
Well, that's what we're going to try to figure out today, right?
Yeah, exactly. So to really get to the bottom of this, we dug into some interesting research. We've got excerpts here from a guide called Pros versus Retail Investors, AI in Investing. It's got a great real-world case study, too, which we'll get to a little later. But, think of this deep dive as your sort of express route to understanding, like, how AI actually plays out when you're making investment decisions.
Yeah, cut through the hype, right? Get down to the brass tacks.
Exactly. We want to move beyond the hype, really pinpoint how AI is, making a difference for better or for worse for both, the professional investors and the individual investors like us. And we want you to walk away from this with some really clear insights without feeling like your head's going to explode with jargon, right?
Yeah. It can be easy to get lost in all that.
Exactly.
One of the key insights from the guide, and one we should tackle right off the bat, is that equal access to AI doesn't automatically mean equal investment returns.
Right.
The expertise in how you use it is the real game changer.
That's a great point. And it kind of relates to this common idea, this idea that AI is going to somehow level the playing field in asset selection. Like the thinking is, if everyone has access to, the same AI tools, isn't everyone going to be equally successful in picking the winning stocks?
Yeah, I can see how someone would think that. On the surface, it seems to make sense, right?
Yeah.
But this guide kind of throws a wrench in that. There's a curveball,
Yeah.
It basically says, look, if everyone has access to the same AI stock tips, why isn't everyone suddenly crushing the market?
Right. It's a really simple question, but it kind of blows your mind when you think about it, right?
It really does.
Yeah.
And it highlights this crucial point that just having the same AI doesn't magically guarantee that you're going to have the same winning outcome.
Exactly. And, the guide actually points out a pretty big danger here, especially for retail investors. It says that AI could actually make existing bad investment habits even worse.
Oh, yeah. Think of someone who's already prone to jumping on the latest trendy stocks, right? They see an AI pumping out these hot picks and they, just go all in without really understanding why those stocks are being highlighted or, how healthy those companies actually are.
It's like, giving someone who already overspends an even easier way to find things to buy.
Exactly. And, it's not that the AI is intentionally misleading them. It's that if you don't have that underlying expertise, it can sort of push you further down the wrong path. The guide suggests that if you're not careful, you could be using AI to reinforce your own pre-existing biases.
So the takeaway there is, if you already have a shaky investment strategy, AI can make it even shakier.
Yeah.
If you don't have that solid foundation of market understanding, AI can actually amplify your weaknesses, right?
Absolutely. Now let's contrast this with how professional investors approach asset selection using AI. The guide uses the example of this guy, Adrian Rawls. We'll talk more about him later on. But the point is, professionals, they typically operate within a really well-defined, structured process, right? A common one is what they call top-down macro analysis, where they look at the overall economic environment first, and then they kind of zoom into specific sectors and companies. And for them, AI isn't about replacing that whole framework. It's about making that framework even stronger.
So they're not just blindly following whatever the AI spits out. They're actually using it to, make their existing knowledge even more powerful, almost like a force multiplier, right?
Yeah, I like that analogy.
The guide calls it a sort of superpowered research assistant for professionals. It basically helps them save a ton of time on all that deep analysis and zero in on those really high potential opportunities,
The guide makes a really good analogy here. Think of it like car repair. A skilled mechanic, they have a really deep understanding of how a car works, right? So they might use a diagnostic AI tool to confirm a suspicion about a certain part malfunctioning. Right. But someone who just tinkers with cars, they might use the same tool get a list of, potential issues. But without that expertise, they could end up fixing the wrong thing entirely.
Right.
Just because you have the fancy diagnostic tool or the AI-powered stock picker doesn't mean you have the knowledge to know what to do with that information.
Exactly. Just because you have the same tools doesn't make you a mechanic, right?
Right.
Or a pro investor. So the pros, they're using AI to really hone in on those opportunities. But retail investors, they might be getting misled by all this information they don't really understand.
And what's even more interesting is that AI can actually widen the performance gap between those pros and the everyday investor.
Yeah.
Well, think about it. Someone like Adrian, right? He can use AI to quickly sift through mountains of data, right? Pick out the really important insights, and then focus his research time on what really matters. He's basically using AI to filter out all the noise.
So he's not wasting time on all the irrelevant stuff.
Exactly. But the average retail investor, they're often still trying to figure out what data is even relevant in the first place.
Mm-hmm.
So, it's not necessarily that AI is leveling the playing field. It could actually be making it less level.
It's giving the pros an even bigger advantage.
Potential, yes.
So that's a key takeaway for listeners, right? Professionals are using AI to find those high-impact insights, and that's something that's often beyond the reach of the everyday investor.
For sure.
Okay, so let's talk about some of these specific AI tools that are out there that everyone has access to now. We're seeing a lot of chatbots, trading apps with AI features built in, and even AI-driven stock screeners.
Yeah, they're popping up everywhere.
It's tempting to think, okay, great, now I can just let these tools do all the hard work for me. But is it really that simple?
That's a great question. And the guide asks a similar one.
Yeah.
Is simply having an algorithm on your phone enough to make you a successful investor?
I mean, I wish it was that easy, right?
Right. Wouldn't that be nice? But the guide makes this distinction between using AI as a crutch versus using it as a tool. And I think that's really important.
Okay.
For a lot of, less experienced investors, AI can become a crutch. They might ask a chatbot a very general question like, what should I invest in now? And then they just blindly follow whatever generic recommendation it spits out.
Yeah, it's like relying on training wheels forever and expecting to win the Tour de France.
Yeah, exactly. You're not learning how to ride the bike yourself. You're just leaning on the AI to do all the work.
So the AI can become a crutch if you're not careful. It can replace actual analysis with just following these generic outputs.
Exactly. Now, professionals, on the other hand, they approach AI as a tool, not a magic answer machine. They've already got that macro knowledge. They have their investment framework. So they're asking AI very specific, targeted questions. They know what to ask. And importantly, they know how to interpret the answers they get.
It all comes down to knowing what questions to ask in the first place, right?
Absolutely.
It's like having, like a supercomputer and just asking it, what's the meaning of life? You're probably not going to get a very useful answer.
Yeah, you need to know how to use the tool.
Exactly. The guide has this great line. It says, what good is a super powerful AI if you don't even know what to ask it? It's like giving someone a Formula One race car who doesn't know how to drive. It's not going to magically make them a champion driver, is it?
Nope, not at all.
The AI will follow your lead, and if you're giving it the wrong inputs or you're missing some important context, it's not going to magically fill in those gaps.
Right. The pros use AI for what the guide calls grunt work. Things like quickly scanning reports, crunching numbers, but they're always setting the parameters for that work and checking the results against their own understanding.
They're in control.
Exactly. But a retail investor who doesn't have that framework to begin with, they might not even know where to start with AI, which can lead to, wasted potential, or even worse, making things worse.
And there's also this issue of false confidence, right? I feel like a lot of these AI tools, they spit out these really polished-looking charts and analyses, and it can make people feel overconfident about a trade, even if they don't really understand what's going on.
Oh, yeah, that's a big one. The guide points out that, AI can make things look really good, but just because it looks good doesn't mean it's actually a good trade.
Right. Confidence doesn't equal competence.
Exactly. And, professionals, they're always skeptical. They're always double-checking the AI's output against their own research and real-world data. But retail investors, they might skip that critical step. They might think, oh, the AI said it's a good idea, so it must be, and then, boom, they end up losing money.
So another key takeaway for listeners, AI analysis can create this false sense of security. Don't skip that critical evaluation step.
Absolutely. You always got to be thinking for yourself.
Okay, let's move on to another crucial area. Risk management. The guide says this is really where professional investors shine. They've got these really strict, experience-based rules in place. Things like position sizing, stop-loss levels, and diversification limits.
Yeah, those are the guardrails, right?
Exactly. And an AI, it can monitor those rules for you, but it can't create those rules for you if you don't have them already. And that's a big vulnerability for a lot of retail investors.
Right. If you're relying on AI to manage your risk, but you haven't established those core principles yourself, you're setting yourself up for trouble.
Right. Like, is an AI trading bot going to know if you've put way too much of your money into one trade? Is it going to realize that your portfolio is super concentrated in a few tech stocks just because they've been doing well lately? Probably not.
Probably not. And without those human set boundaries, the AI might just keep making recommendations that unknowingly actually increase your risk.
So the AI can actually amplify risky behavior. Like, imagine you're an inexperienced trader, you've been on a winning streak, right? You ask an AI for risk advice, but without carefully framing your question, it might just tell you what you want to hear. Oh yeah, you're doing great, keep it up. But then the market turns, and suddenly you're in big trouble.
That's a recipe for disaster.
It is. And that's a key takeaway right there. AI can make you take even bigger risks if you're not careful. You've got to have those risk management principles in place, you know?
Absolutely. The guide has this analogy about brake failure in a car. A mechanic wouldn't just trust one reading from a diagnostic tool. They'd test the brakes thoroughly, make sure they're working in all sorts of conditions. But someone who doesn't know much about cars, they might see a green light on the tool and think everything's fine, only to have their brakes fail later on.
And it's the same with investing. If you think AI's risk metrics are foolproof, you could be headed for a crash. Professionals, they use AI to, like, enhance their risk management. They might run stress tests, see how their portfolio would do in a market crash, or do scenario analyses to look at different outcomes, but they always interpret those results with their own expertise.
Yeah, they're in the driver's seat. They use the AI to get information, but they're still the ones making the decisions about risk.
Okay, so all of this really leads into this key difference between, artificial intelligence and human judgment. The guide makes it super clear that AI, it doesn't have real human judgment. It can process tons of data really fast, but it doesn't understand context, emotions, all those things that can really drive the market.
Right. And that's why smart investors treat AI as like a very helpful assistant, not the final decision maker. The human, with their experience, their understanding of the bigger picture, they're the ones who ultimately call the shots.
Exactly.
Yeah.
A lot of investing is about intuition, right? That gut feeling that you get when, a rally seems too good to be true, or when everyone's panicking, but you think it's an opportunity. AI can't replicate that.
Nope. It can't read between the lines. It can't tell if the Fed chairman is, subtly hinting at something in his speech, or whether a CEO is being completely honest during an earnings call.
And those are the kind of things that experienced investors, they pick up on. They can tell when something's not quite right, even if the numbers look good. An amateur who's just relying on AI might miss all of that.
They might be missing the forest for the trees.
Exactly. And that's why it's so important to be able to override those AI recommendations sometimes. Like, the guide gives an example. Say an AI says, buy this commodity based on its analysis. But the investor, they know there's a geopolitical situation brewing that could disrupt supply, something that the AI hasn't factored in. Well, they're probably going to ignore the AI's advice.
Right, because they're seeing the bigger picture. But a retail investor might not even realize there's a conflict. They might think, well, the AI knows best, and then boom, they get blindsided.
So the key takeaway here is that effective AI in investing, it's about collaboration, not replacement. Professionals, they're constantly checking the AI's output against their own knowledge. It's like a dialogue.
It's a partnership.
Exactly. But for a lot of retail investors, it's more like, okay, AI, tell me what to do. They're just taking orders from the machine. So a question for our listeners. Is the AI advising you, or are you blindly following it?
That's a really important distinction to make.
It is, because that difference in approach can make a huge difference in your results.
And that's really why, even though everyone has access to these great AI tools now, the pros still have an edge. If AI could really level the playing field, you'd see tons of amateurs running hedge funds and beating the market.
Right.
But we don't see that. The advantage is still with the people who know how to use AI wisely.
They're the ones who are integrating it into their process, but they're not giving up their own decision making. They're not hoping that the AI is going to magically make up for a lack of skill.
Right. AI is a tool. It's not a replacement for expertise.
Okay. Let's talk about time horizons now. The guide points out that a lot of retail investors, they're drawn to AI because they think it's going to give them like quick trading tips, the hot stocks for next week, or even for day trading.
Yeah, that's the get-rich-quick mentality.
Right. And AI can certainly spot patterns and make predictions, but how often do those short-term trades actually work out for the average investor?
Not very often, according to the research.
Yeah. Pros, on the other hand, they tend to have much clearer, longer-term horizons. They're not trying to time the market perfectly. They're thinking about where things are going to be in 5 years, 10 years.
And they use AI to analyze data within those time frames. Like, if they're looking at a long-term investment, they might use AI to study those long-term economic trends. Or for a shorter-term trade, they might use AI to look at, like, intraday price patterns, but it's always within the context of their overall strategy.
The guide also talks about the danger of data overload, especially when it comes to time horizons. AI can give you so much information, from like second-by-second price changes to long-term economic forecasts. It's easy to get overwhelmed.
And without a clear plan, a retail investor might end up jumping from one time frame to another, making all these scattered decisions.
They're getting pulled in every direction.
Exactly. But pros, they stick to their plan. They might use AI to, like, test out a long-term idea or see how a short-term event might play out, but it's always aligned with their overall goals and their time horizon.
So discipline is key. And this also means knowing when not to act. The guide says that AI can constantly suggest little tweaks to your portfolio, and a novice investor might be tempted to keep making changes, to keep chasing those little improvements.
That's called overtrading, and it's a recipe for losing money.
Experienced investors, they use their judgment and stick to their strategy. They might use AI for those big picture timing decisions, but they're not constantly second-guessing themselves.
They're patient. They have conviction in their approach.
And that's something that AI can't give you.
Right. No matter how fancy the algorithm is, it can't give you conviction or patience. Those come from understanding your investments and from experience.
A novice might abandon a good plan because the AI is flashing a warning sign. A pro can look past that and see the long-term potential.
They're not letting the AI rattle them.
Exactly. The guide says pros actually have a long game advantage when they use AI for long-term analysis. They can crunch through all this historical data and look at tons of different scenarios much faster than any human could do it alone.
And that could really bolster their confidence, right?
Yeah. They see that historically the market tends to go up over time, and they're less likely to panic when things get bumpy.
Yeah. Retail investors, they often don't use AI for that kind of in-depth research.
Yeah.
And even if they do have the data, they might not have the experience to really trust it and stay the course.
So again, AI can help the pros stay disciplined and focus on the long term, but it can also lead less experienced investors astray.
It's all about how you use it.
Okay. Let's talk about this case study from the guide. This guy, Adrian Rawls, he's a financial advisor based in Dubai, and he's definitely not your typical advisor.
No, he's got a pretty unique background. The guide says he's had training from some big names on Wall Street, people from Goldman Sachs, Bank of America Merrill Lynch, even a hedge fund manager from Commerzbank.
That's like the all-star team of finance, right?
Pretty much.
Yeah.
And that kind of training, it's super rare. It means he's got this insider knowledge of all those sophisticated strategies that the big institutions use. And that's really key to how he uses AI.
The guide calls his approach institutional grade plus AI. He basically takes that top-down macro strategy that he learned on Wall Street, and then he adds AI on top of it.
It's like adding a turbocharger to an already powerful engine.
Exactly. So like the guide gives this example. He might use AI to quickly scan through like a ton of global economic reports, pick out the main points, and highlight anything unusual that his expertise tells him is important. So he's saving himself tons of time on that initial research phase.
And that frees him up to focus on the big picture analysis, the strategy, the decision making.
And the key takeaway here is that it's not just about having access to AI, it's about knowing how to use it effectively.
Right. It's like having a state-of-the-art music studio, but if you don't know how to play any instruments, you're not going to make a hit song.
Exactly. Adrian, he knows how to use AI because he's got that deep understanding of the markets. He can ask the right questions, and he knows how to interpret the answers. He's not just plugging numbers into a black box and hoping for the best.
He's got a plan.
Right. He's got a strategy, and he's using AI to execute it. Like, he might ask a question like, okay, given what's happening with interest rates and commodity prices, what sectors in emerging markets look good right now, and what are the risks? That's a super specific question that comes from his own knowledge and analysis.
And then he can actually understand the AI's response and make a judgment call based on that.
Exactly. And that's why the guide says that his edge is so hard to copy. You can't just download an app and suddenly have his level of expertise.
It's like trying to become a professional chef by buying all the same knives and pans that they use. You still need to know how to cook.
Right. In his case, AI is actually widening the gap between him and other investors because he's using it to enhance an already advanced approach.
It's AI in the hands of an expert, which is a totally different game.
So the key takeaway from Adrian's story is that the real advantage comes from layering AI on top of existing expertise, not hoping that AI is going to make up for a lack of knowledge. All right, so as we wrap up our deep dive into AI and investing, what's the big picture?
Well, the guide is really clear. AI is not this magic bullet that's going to make everyone a stock market wizard. Just because you have access to the same tools as the pros doesn't mean you're going to get the same results. The real difference is in how you use those tools, and the professionals, with their experience and their knowledge, they still have a big advantage.
And they're actually extending that advantage by using AI strategically. They're saving time, they're avoiding information overload, and they're making better decisions.
While a lot of less experienced investors might be like drowning in data or chasing bad advice, right?
Yeah, it can be easy to get lost in the weeds.
Absolutely.
Nuh-uh.
So remember, AI is an aid. It's not a crutch. If you don't have that foundation of investment strategy and knowledge, AI can't create that for you. It's like that mechanic analogy again, right?
Yeah.
Having the same tools doesn't make you an expert.
Right. You need the skills and the knowledge to use those tools effectively. So whether you're, a seasoned investor or just starting out, think about your own level of knowledge. Do you have that foundation to use AI effectively? Or would you be better off seeking guidance from someone who does? There's no shame in admitting you need help,
It's better to be safe than sorry, especially when it comes to your money.
Exactly. And I think the biggest takeaway from all of this is that the best results come from combining technology with human expertise. Adrian's a great example of that. He's not just letting the AI run the show, he's using it to enhance his own skills and knowledge.
Just a partnership.
Exactly.
Yeah.
So don't fall for the hype of easy solutions in investing. Even with AI, it still takes skill and judgment to succeed.
And remember, it's a journey, not a destination.
Yeah.
Keep learning, keep growing, and keep questioning. Don't just blindly trust any system, AI or otherwise. Use your own judgment, and you'll be well on your way to success.
Great advice. Thanks for joining us on the Deep Dive today, folks. We'll see you next time.